We wondered what was going to happen with home sales. We learned early on that rental activity was coming back and that we were going to be able to make money leasing properties. And that's what's happening right now. But we kind of assumed that buying property was going to slow down because the price that somebody's willing to pay after the coronavirus pandemic and the price that a person is willing to sell for after the pandemic was to be determined, right? Like where the buyer is going to demand a discount and where the seller is going to accept a discount, where the seller is going to sit it out. This thing is all compacted, right? So the housing market looks like it could just sit out the pandemic because people just don't sell. People just don't buy. It's good for the market overall for property values, not so good for people like us who make our livings on turnover, right? People buying and selling houses. So maybe you've picked up on some of these headlines. Okay, the Koch family backs Amherst in $200 million bet on single family rentals. This is an institutional player, friends of ours, who got a $200 million infusion, increasing their buying capacity to now $2 billion. Why? Because Koch Industries, who has investments in all kinds of businesses, looks at single family rental as a place they want to jack up their holdings on because it's standing tall. It's standing taller than the stock market. It's standing taller than commercial real estate. Like, is office space going to be in demand in the future like it is now? I don't know. Right? Retail, shopping centers, hotels, all those things are being called into question. But right now, today, everyone's paying their rent in single family homes. So people who have capital to allocate in different places are, at least in this case, putting it into single family rentals. Home buying demand continues to show signs of housing market recovery. April 30th. Okay. This is as of a few weeks ago. More of this. Home listing traffic has spiked despite sales going down. Okay. Early indicator. This is also almost a month ago. I thought I had more recent stories because they're popping all over the place. Will the coronavirus pandemic empty the cities? What we're seeing right now, and again, I keep going back to this compacted timeline. I think that I was right that that was going to be a factor that had ripple effects across everything that we're dealing with here, right? And that was that conversation we had about if the stock market goes down on Monday and by Wednesday unemployment is doubled, and by Thursday companies are doing layoffs, and by Friday we see consumer confidence go away, and by the following Tuesday home sales decline, and by 2 weeks later home prices decline. If that whole recession is compacted down to a matter of 5 or 6 weeks, is the recovery going to be opening up just as rapidly? Will the recovery mirror the recession in terms of its severity and its pace and its duration, right? That was the theory there. What we're seeing right now is indications that migration, for example, from New York down to the Carolinas, Georgia, Florida, Texas, that migration from the high density, expensive, high tax areas in the Northeast and upper Midwest making their way south, that's happening over decades. It's being accelerated now. Movement out of the city into the suburbs is being accelerated, right? Like I heard literally 2 hours ago, my family still operates a real estate company in the suburbs of New York. I was talking to my brother. He's got people calling and saying, I need to find a house this weekend. What do you have? And they're literally they're buying a house or renting a house outside of New York City and moving in and waiting to figure they can't stand staying in the petri dish of New York City anymore. It's scary, right? And fear is motivating. There are folks that were going to leave New York like I did and come to North Carolina or go to Florida that were going to do it in 10 years. They're doing it next month. And so we're sensing that, this is just my perception of it, okay? That what would have been the migration from the high California going to Phoenix and Vegas, right? People coming out of the city of Seattle going out to the burbs. This affects every one of our markets. People coming out of Minneapolis downtown, coming out to the suburbs. All of this stuff is accelerating. So I think we're going to have 10 years worth of migration out of New York and California to our markets, out of the city centers to the suburbs in all of our markets. We're going to have 10 years worth of migration happen over 18 months. People are in a rush, okay? And what it means is that buyers are back. Buyers are back. We are now seeing it. I gave you institutional examples of that. Open Door is buying again. Zillow Instant Offers is buying again. Our institutional clients are showing up and saying they're loosening up the purse strings again come June 1st. All right. So what that tells me, because those are the customers that they write articles about, and those are the customers that I come in contact with every week, the compacted timetable also applies to what was a yes in February became a no in March, is back to being a yes again in June.